Hello and welcome to our viewers on cruxinvestor.com and also to our listeners on Cruxcast, our podcast series. And for those of you new to Crux Investor, please click the button in the corner of the screen to subscribe to our YouTube channel. We're talking today to Craig Parry. He's the CEO of IsoEnergy. They're a Canadian uranium explorer on the TSX-V. He's going to talk us through his assets, the involvement of NexGen, and their strategy for the coming year. For these topics and more, check the description below and click on the relevant timestamp. Hi Craig, how are you?
Good, Matt. How are you?
Not so bad. Well, thanks for joining us today, making the time to tell your story. We usually get people to kick off with a sort of 2-minute summary on their business. Why don't you do that and we'll get stuck into some questions.
Sure. Thanks, Matt. So we're IsoEnergy. We're a uranium explorer focused on the eastern Athabasca. We're the first of the spin-outs from NexGen Energy. Of course, NexGen, having discovered the Arrow uranium deposit, that business has now grown from a $10 million market capitalization to an $800 million market cap. They're moving that project into production. And we're a spin-out, so we're essentially the business development and exploration arm, very much focused on the eastern Athabasca. We've built up a big land position out there, very well funded, in part thanks to the support of NexGen. We've raised 17 million to date, and very pleased to report that we've made a recent discovery there in that eastern Athabasca on our La Roque East property. We're drilling our Hurricane deposit out as we speak, and that's a fast-growing deposit. I think we're the only uranium junior with a recent high-grade discovery.
Love to understand the thinking, the rationale, the thesis behind setting up now. Obviously, we saw in the last cycle, it went from 50 companies to 500 companies. I would like a sort of sense of where you think you are now in that cycle and, how you got to where you are today. Let's start with that and then we kind of get into it.
Sure. So, look, where we are in that cycle, I think we're probably, we saw back in 2005 to 2007 a massive boom in uranium and uranium equities. Uranium price went from $9 a pound to $130 a pound. And then off the back of that, there were some spectacular gains in that bull market, that boom market. Paladin Energy, for example, went from 2 cents to $10. Dramatic increases in equity valuations. And I think we're probably at about 2003, 2004. We might be a year or two away from a serious boom, but the scene is set for that boom now. And then, against that backdrop, we've always been bullish on uranium. And hence we set up NexGen Energy back in 2011 and 12. Lee Courier, myself and Chris McFadden got that company up and running. Lee was the main driver, of course, and we helped fund the company and get Lee started there. And he's delivered spectacularly well for us and our other shareholders. He made that discovery there, the Arrow discovery in NexGen back in 2013. And of course that saw NexGen, despite markets being as bad as we've ever seen them. NexGen, we did the original financing there at 5 cents, now trading around $2 today, got as high as $4 a while back. So, the thesis is playing out. I think globally demand for uranium continues to grow strongly. It's a low carbon solution to energy problems globally. So, we've always liked the thesis for it. And we set up IsoEnergy against that.
Right, let's talk about that. Let's talk about your company. That's what we want to understand. So you guys were associated with NexGen. They're a major shareholder, 53%. Whose idea was it to set up IsoEnergy? Why'd you do it?
Well, look, we took that decision as a board. We had a bit of a challenge there with the discovery of Arrow. Our investors there at NexGen expected us to focus all of our time, dollars and efforts on that deposit. And that saw our very good portfolio out in the eastern Athabasca not seeing much love and attention. And being uranium bulls, we thought there's a lot more we can do out there. There's an opportunity in weak markets to build up a much bigger land position in what is really the most prospective part of the world for uranium. So in 2016, we took that decision. I came on board as CEO. I was a director of NexGen, of course, and involved there. But I took the decision we took the decision to come on board as CEO. I moved my family to Vancouver back in early 2016 to run the company. We staffed the company up. We raised, I think, in that first capital raise we did in late 2016, we raised $6 million. Now, that was at a time when really no one else in the sector was raising much money at all, apart from NexGen. NexGen, of course, at that time was very successful. We had Li Ka-shing come in as an investor then, but other companies really struggling to raise capital. So that sort of set us up very, very well. And we're very fortunate we managed at that time to build on the team we had. But the key addition to the team at that point was a man called Steve Blower. Steve was the head of exploration for Denison. He led the team that discovered the Griffin part of the Wheeler River ore body, which is a big chunk of value in that company. So Steve joined us, and Steve's been instrumental in the growth and success we've had here at ISO. So Steve's our head of exploration here and has led our discovery that we've made recently.
Right, okay. But you're $33-ish million company. It's early days. The uranium market, you go into great lengths in the document. I think we've certainly covered off in previous interviews with uranium fund managers, etc. A little bit about that. I'm interested in how you think, as a small company, you're all big company. There's a great board. You've got a great board. There's some big names. You're all NexGen. That's a well-told story. They're a major shareholder. But how does moving from a big company like that into back into the lower end of the junior market, let's face it, right? How does that work in today's environment? How much cash have you got today? How much cash have you got?
Yep. Yeah, look, all good questions. And I suppose one of the things, as I say, we're believers in uranium. And if you're going to explore for uranium, you should do it in the places where the biggest and best and highest grade deposits are. So, so we saw that opportunity as a real, something that was being missed by the market, and it was opportunistic in part. We had a bigger mandate, bigger remit, of course. We saw a lot of opportunities around the world to acquire major assets at bottom of market prices. Unfortunately, as you do due diligence on some of these things outside the Athabasca basin, what you find is that they're not quite as good as people and the market would have you believe. So we haven't made any of those acquisitions outside the Athabasca basin. But we've stuck to our knitting and expanded our portfolio out in eastern Athabasca. And so you're right, our board, Chris McFadden, had a 20-year career there at Rio Tinto, general manager, commercial and exploration, for example. I was with Rio Tinto for 9 years. Lee Courier, our chairman and co-founder and founder and CEO of NexGen. Lee, he built a uranium business in Australia, went on to be the head of First Reserves, a major private equity group there in the UK, their uranium business. So, there's a sort of thick stream of big company experience, uranium experience, and what that gives us, I suppose, and the reason we've sort of gone into exploration is we see there's a big opportunity, but we also have that experience to take a project from its earlier stages, just as Lee's doing at NexGen there with Arrow, take it from exploration all the way into development and eventually into production. And so having that sort of expertise on the board affords us an advantage over, we think, a lot of our competitors.
Right, but what about the cash component? Obviously, NexGen, they're advanced now. Okay, they're a $700 million company, but it's kind of irrelevant at this point because no one can produce at these prices. Spot prices is what it is. You got to wait for the market to pop before it goes. And everyone, you got a lot of people sitting on former producing assets, DFSs, which they can get into production relatively quickly. So let's all assume the market's going to pop. You guys, you're early exploration, so you're going to miss this cycle, aren't you?
Look, I don't think so. And I think, of course, we offer shareholders the opportunity to come in, get set, invest at the earliest of stages, and there's opportunities to get on and off a story as the cycle evolves. NexGen, for example, they will, I think, absolutely get the sweet spot of the boom. The guys there are into that permitting, the earliest of stages of development. So they're well set up on that front. I think for us, what we hope for, of course, in a uranium market is that things are much more sustainable. That boom in 2007 saw that dramatic jump in price and then a fairly rapid collapse, of course. In part driven by Kazakhstan bringing on dramatic new supply. We don't have those same factors at play now. There is potential for some new production to come on stream, potentially return to production from McArthur River, but importantly from NexGen's Arrow. They'll be the biggest source of supply to come back on stream. But, what we hope for is a much more sustained and steady increase in uranium prices over time. That provides opportunity. I think for us, though, we've made a discovery in the eastern Athabasca, our hurricane discovery. We made that in July last year. So we're very well positioned as the only company with a new recent discovery as this bull market starts to take hold, gather steam. So, we're pretty well set up. But just to go back to your question on funding, having that support and success of NexGen behind us has allowed us to raise money when others haven't. So right. We've raised $17 million so far over the last 2.5 years. We raised $5.5 million in a bought deal from Cormark and PI Financial back in December last year. That was, I think we were the first uranium junior in many years to do a substantial bought deal type financing. So that set us up pretty well. We've still got about $4 million in the bank at the moment. And, we've got good, strong support from NexGen as a major shareholder as well. So that sets us up neatly, I think, to benefit from this emerging bull market.
So a lot of moving parts here. Obviously, the uranium market's quite unusual. It's a very large contract market in terms of when people do get into production. Utilities are buying it, on 5-year cycles typically, and the spot market's a lot smaller. So there's that component which you don't necessarily have in quite a few other commodities to contend with. But okay, I'll take your lead. Let's talk about NexGen. They've got 53%. I presume they've followed the money the whole way through. I mean, or have they?
Yes, absolutely. Right. So the last two financings we've done, they've backed substantially. So that $5.5 million financing we did back in December, NexGen put in $1.5 million of that. So you right. can see that level. So it's substantial. I think that the company would like to retain a majority stake in IsoEnergy going forward as well.
Well, I guess that's optionality for them, really, isn't it? So they're not financing pro rata, but they are coming in for a meaningful amount, and at some point they've got a decision to make. So the relationship that you have with them, you're all, you've got a very close relationship with them. Former, you worked there, right? What is the basis of that relationship? Who leads who? They're a majority shareholder, but who runs the company?
No, look, very independent in that sense. So when we set up the company initially, all of the same board members. Lee's now bolstered the board there at NexGen. So, you've had Warren Gilman come on board. Warren was leading Lee Ka-shing and CEF's investment in the company. He's now expanded the board. Most recently, I actually stepped off the board a couple of months ago, primarily to focus on IsoEnergy and what we're doing here, because the company's growing rapidly as this deposit that we're drilling out at the moment grows. So I needed to step back and focus on that. So I stepped off the board, but I also made way for Brad Wall, who was the former Premier of Saskatchewan, a tremendous individual to bring onto the board as an independent director. So, he's bolstered that board. But over at ISO, we've still got the original NexGen board and the backing there, and those guys, their track record success speaks for themselves. So speaks for itself, I should say. So, the connection, the tie is very strong. I suppose when we set up the company, we saw that ISO would be effectively an exploration and business development arm in some sense. But I should say that they're very independent companies. Lee lets me get on with the team here and run the company independently, with all those checks and balances and good governance that you would expect to have with an independent board in place as well.
Right, because at the moment, obviously, you've got a bunch of exploration targets and assets which you're working on. You are sort of de facto exploration arm of NexGen in a way. They've kept that optionality and they have control of the company in the sense that they have 53% today. At what point does that conversation come along where they go, okay, this is now in our interests. You've delivered to deliver the company to a position where it's really interesting to us. The value is there for us to take, and we'll take control of this again. I mean, is there a piece of paper which talks about that, or is it these just conversations which may turn up at some point?
No, look, there isn't. There's certainly no piece of paper that stipulates any of that, and there's no shareholder agreement or anything like that. NexGen's, its shareholdings carry the exact same rights as all other shareholders, so completely independent in that sense. But I do think that, if you're going to grow, I think that NexGen, with that Arrow deposit, has the potential to be the most significant uranium business in the world. That includes Cameco and Kazatomprom. Lee's talking about they're producing 25 million pounds per annum plus at really a step change in cost base to other producers globally. I think once built, Arrow will occupy almost the entire first quartile of the cost curve at a significant discount to every other producer. So there you have the potential to build the world's biggest, most significant and successful uranium producer. And if you're going to build a serious business, a serious company with scale, then you do need other projects, of course. And so having a foothold in ISO, should any of our work lead to a serious deposit, and we think we're getting close on that front with our Hurricane discovery that we made midway through last year, having other projects of quality is important as you grow that business. So it's far too early to speculate on how that all may play out, but certainly having a supportive shareholder like NexGen there is absolutely a great thing for us.
No, for sure. But what I'm trying to understand is, if I'm coming in as a new investor, should I be investing in ISO or should I be investing in NexGen?
Sure. No, very different value propositions, I think. NexGen, of course, it's over an order of magnitude larger than us in terms of market capitalisation, $700, $800 million market cap versus our $30 million market cap at the moment. And very different risk profile, of course. That Arrow deposit is now a true tier 1 deposit, moving in through, they're moving very rapidly through those stages of permitting and development. So it's a development story, and against a backdrop of an improving or bullish uranium market, it will always do very well. Our proposition, we carry, we're in the exploration phase. We've got a recent discovery. We don't know how big that is yet. We're trying to find out as we speak. We've got a drill rig turning. I think we're on to hole 3 as we speak of our summer drill program. That could grow very, very rapidly, of course. And ergo, as it develops, our growth profile could be substantial as well. Very, very different to NexGen, though, because we do, it's an exploration play and we carry all of that exploration risk, of course.
For sure. So what I'm hearing is you're telling me, reputationally, because you guys have come from the right backgrounds, we should trust you. You've got NexGen as a large shareholder. We should trust you and them. You've got some assets which you believe will become valuable, so we should trust you. but I don't quite at the moment understand your strategy. If it's a go drill some holes, see what we've got. We're in the right postcode. We're bound to find something. What's the moment where the value is created for shareholders like me, new people coming into the company? I should be thinking, well, do I just hold off and wait till these guys have gone a little bit further? Do I come in now while their price is good? And quite frankly, at some point, do they lose control because NexGen find it too interesting to ignore?
Yeah, good question. Look, the real value there, I suppose, for investors, we've made that discovery. Our share price has only just started to move. If people look at our website, isoenergy.ca, you'll see our corporate presentation in there, and we put in NexGen's share price chart just as a guide as to what happens when you make a discovery of significance in the Athabasca basin. As I say, we took NexGen from 5 cents to trading at $2 a share today. So, delivered investors 40 times their original investment and counting. At IsoEnergy, most of the money that we've put in personally and that has come in so far has been at around $1. So we're under delivering on that front. But back when we drilled that discovery hole, we were trading, this is July last year, we're trading at about 27 cents a share, now trading at around 52 cents a share today. So that discovery started to deliver value for shareholders. But, the upside is dramatic. Of course, some significant, serious data points out there. NexGen's share price chart. Take a look at Denison. Denison's valuation on a significant discovery there. They've got Phoenix and Griffin, which Steve Blower led the team to discover. Market capitalisation of about 400 million today. We've seen Fission go from zero to a few $100 million market cap. And then, of course, people will remember, particularly in Canada, the success that Hathor had. Now, Hathor discovered the Rough Rider ore body back in 2010. 2009, 10. They took that from a very small market cap and sold that company to Rio Tinto for $587 million back in 2012 in a post-Fukushima environment, I should say, as well. So, a discovery in the Athabasca, particularly in the Athabasca, because the grades are so high and the density of value in those deposits is so great. Those discoveries can deliver real value to shareholders. So that that's the overall picture. That's where things can go. That's right. The opportunity.
Do you think, or are you worried at all that you are getting the kind of Canadian premium? I mean, everyone wants it, and you're also getting a premium because of the connection with NexGen. Because there are lots of companies out there which are much further along the development curve than you. Okay, you're early stage exploration in the right postcode. You're on the right postcode, but there are people sitting with more pounds in the ground in terms of measured and indicated. They've got the DFS done, ready to go. They're sitting at roughly the same market cap as you, right? And that's got to hurt. that has got to hurt. But does that not worry you in terms of, okay, if I look at the money you put in so far, 17.5 million, your market cap's double that. It's great. Okay, that's a really good start. But when you get going, do you think you're going to continue to receive that same premium based on who you're associated with, what you've done in the past? Or you are going to have to start producing some numbers and get some drill holes and create some real value that way with the asset and what's on the ground. So does that hold some fear for you?
It's a tough one to answer because I think we're getting a Canadian discount at the moment.
All right. Okay. That's good. Is that your version of we're undervalued? Yeah.
Well, you've seen, of course, a lot of the risk capital's been sucked out of the Canadian market into other sectors. And of course, the big one is the cannabis sector here. And so, funds have dried up for the resource sector to some extent. You now compare that to Australia, and of course, very interesting first half of 2019 for investors in the resource space, because Australia finally overtook Canada as a place where most capital is being raised for mining projects. Now, that's happened rarely on other occasions in history, but I think eventually we'll see that money come back into Canada, and this will be again the primary mine financing destination in the world. So, there's been a few things happening on that front. But I think, and if you look at some of the Aussie names in the uranium space, there's some good projects there, certainly advanced projects, but then you look at the grade of those projects and their orders of magnitude lower grade than what we're drilling at the moment at our Hurricane deposit, or for example, NexGen's Arrow deposit. So I certainly think, just generally, if you look at the Athabasca basin, value of property in that part of the world, it's very hard to put your foot on anywhere, particularly in the eastern Athabasca, and since the Arrow discovery, the southwestern part of the Athabasca, that ground always carries significant value. When we started ISO, we did a deal to acquire a property called our North Thorburn property. We paid the owner of that project, Jody DeRouge, $1 million in stock in ISO. Now, it's a very well located property, and we think has great potential, but at that stage it had no real modern exploration done on it. So property in the eastern Athabasca, because of the opportunity that it presents, is always highly valued. And hence, I think you do see Athabasca Basin companies having potentially, as you say, a premium. I think, not really a premium, just more value ascribed to them because they're in the Athabasca Basin.
Yeah, well, that's a tough one, right? That's a tough one. You're sort of doing peer analysis. There's a bunch of variables you get to, but I think for those guys, there's an acceptance clearly. Athabasca Basin. I think some Aussies are trying to position the northern parts of Australia. Won't name names. As the Athabasca of Australia. The Kazakhs have got their version, and everywhere else is fairly low grade. I buy that, but again, I want to come back to this from a position of our subscribers, followers are retail, they're family office, they're high net worth. Okay, so we've done a lot of work with them, shared a lot of information with them about the marketplace, the opportunity. I think it's a general acceptance that it's going to go when the utilities deal with this 232 issue, which I'm not going to ask you about. We talked about it enough. How do junior companies like yourselves survive? How do you keep the lights on long enough to get to cash flow? How do you keep people interested in what you're doing long enough to be able to raise money at a reasonable rate? Because you are going to have to raise more money. It is going to be diluted. Your share price isn't going to stay the same unless you start delivering some results onto the ground, right? Is that fair to say?
Yeah, look, absolutely. And I think, the way we've set ourselves apart on that front, firstly, having that NexGen connection has been tremendous. And our original backers in ISO had made a lot of money out of NexGen. And hence we've found it, fairly never easy to raise capital, particularly in the worst uranium market anyone's ever seen, but probably relatively easier than our competitors.
Yeah, but let's get to you and what you were going to do. Because if I do a word search on the transcription of this, I'm going to hear NexGen more than I've heard ISO. And I think that you guys got to take that experience and now convert it, or tell people how you're going to convert it to get people interested in what you're doing. So what is it that you're going to do? Why should people come in now?
Sure. Well, let's talk, broadly about what we're doing, the strategy. So our strategy is so very, very simple. And that is put your foot on as much of the eastern Athabasca as you can, still the most prospective part of the world for high-grade uranium deposits. We're surrounded by them. Our Thorburn Lake property, for example, is right next door, 6 kilometres away from, and a long strike from Cigar Lake, one of the world's great uranium mines. So put your foot on as much of that prospective ground as you can. Do it as cheaply as you can, and of course, our timing's been very good at that on that front. You know, having the team we've got, particularly Steve Blower on board, we've had great connections into the other majors, Cameco, Areva, now Rano and JCU. Do deals with those guys, and you know, build up a bigger land position in that prospective area. Then take what we've learnt from NexGen and what Steve's learnt from that Griffin ore body. Griffin, of course, is another basement-hosted deposit. You know, most of the deposits that have been explored for and discovered out in the eastern Athabasca are basement-hosted. Are unconformity associated. We now recognise that those basement-hosted deposits like Arrow, NexGen's Arrow, are the best things to find and explore for, because they can be built much more cheaply and operate more cost effectively than those unconformity related deposits. So take our learnings from those deposits and apply them to the eastern Athabasca that's never been effectively or thoroughly explored for those types of deposits. We think there'll be many other basement hosted deposits in the eastern Athabasca, just haven't been looked for. And then the other thing is that going back to 2007, a huge amount of money was raised around that time. And a lot of those dollars went into drill holes in that eastern Athabasca basin. But of course, all of those explorers ran out of money in 2011 at the same time, and that included Cameco and others. They cut back their exploration budgets in the wake of Fukushima. And so that meant a hell of a lot of first-pass drilling was done in that eastern Athabasca. Mineralised intercepts were hit in that drilling, but they've never been followed up because there's been no money for those explorers to do them. And what we've found is, you know, it's a dripping roast of opportunities there.
But where's that data now? Who owns that data?
So that data, you know, is publicly available largely because it's in assessment reports. So we know we've gone through those, and we've done a ranking and prioritisation process for every single property, every target on the eastern Athabasca. I think we've gone through we've ranked and prioritised 7,000 different opportunities in the eastern Athabasca. We've whittled those down to a short list of 25, and then we've gone and put our foot on as many of those that we can. And we've managed to do that successfully. Our Geiger property is a good example of that strategy playing out. Our La Roque East, where we've discovered Hurricane, same situation. But the Geiger property, when we acquired that off Cameco back 2 years ago, we found, you know, that property had 7 mineralised intercepts that had never been followed up. Though any one of those intercepts could be tantamount to a discovery hole. So, you know, our strategy there has been very simple. Then go in, fund the company and test each of those targets. We did that, and the best example of that strategy playing out well for us has been our La Roque East acquisition. We acquired that off Cameco back in May last year. We paid the princely sum of $300,000 worth of stock and $20,000 in cash to Cameco. Within 6 weeks, we had a drill rig on site. We only had budget for one hole. We were finishing up a program nearby at Geiger. So we wanted to go and just test our very best target. So having done that deal for $320,000 in May, we had a rig out there at the end of June, and we announced our discovery hole in July last year, which was a really spectacular result. You know, some of those beautiful high-grade uranium hits that you expect from the Athabasca. And we've been drilling ever since. So for me, you know, I've never seen a company take an acquisition through to discovery so very quickly. And that's the opportunity that the eastern Athabasca presents. That's the opportunity that ISO presents. So we've got, in the portfolio, we've got 20 other targets that look like that are drill-ready follow-up targets to mineralised intercepts that could, any one of those could deliver a discovery. Of course, now having made that Hurricane discovery, that's become the focus for us. So we've drilled 13 holes there up to the end of winter last year, and we've now just started a follow-up program. We're drilling 16 holes over the next 2 months.
Okay, so if I look forward, let me start by looking back. I think I said at the beginning of this interview, you know, this space went from 50 to 500 and back down to 50 again. Operators in the uranium space when it went, okay, and obviously Fukushima happened, and you know, money became scarce. Are you worried about new entrants coming in? Because it's not a case of do you have the best project, it's who makes the most noise and distracts retail investors, because you know the Canadian brokers, they're very good at telling a story without necessarily understanding it. So do you feel that that could be a distraction for you, or are you very, very confident of your assets, your story, to be able to stand out despite sort of, you're not first to the party, okay? You know, NextGen, Fish, and Cameco, they're all there. They're sitting with big assets, so you're not necessarily late to the party, but you're not early either. How are you gonna stand out from this swathe of new entrants into the market?
Yeah, look, well, I tell you, that swathe of new entrants, we look forward to that, because if if we're seeing that there's something in the sector broadly going right, and of course, they'll all flood back in. Every man and his dog will see. Yeah. I'm sure we'll see a lot of Bitcoin miners and companies like that becoming uranium companies again. So we look forward to that day, certainly. But we will. Well, it means that the macro picture's picking up, and we're getting eyeballs back on us, which is always a good thing. But I don't think we have to worry too much about standing out, because we are the only junior with a recent high-grade discovery that we'll be drilling out as that market kicks off. So pretty straightforward to differentiate yourself. And we don't get too bogged down in what the competition's doing. We stick to our knitting. I've outlined the strategy there. It's a very clear, straightforward strategy. We'll just stick to our knitting and keep doing that. I don't mind if the market stays in the doldrums for another year or two, because there are other properties out in the Athabasca that we'd like to put our foot on. And so, we've seen prices, the cost of those deals starting to rise. It'd be lovely for us to get in and do a number of other deals and put our foot on more of that ground out there before things really take off. I'll look for selling some of those properties that we've got, some of our lower priority properties, to those guys as they come along.
You've sucked me in. I can't. You just said something. I'm going to have to ask you. So you say, I don't care if the market stays like this for another year or two, because it's opportunity. If you've got cash or access to cash, you can buy some stuff up cheap. Great. Yep. Do you think that's a reality?
Look, for us, we don't mind, because we've been here. We're persistent, we're patient. It's patient capital that backs us. Yeah. So we don't mind. Do I think it's a reality? And look, I don't. I think that the second half of this year, and I'll preface this by saying I've been spectacularly wrong on this for the past few years, because I have thought that enough has taken place that we should have seen prices really take off in the last 2 years. And that's been, to my mind, the industry has been a supply side story. Forget about the demand side. Demand is growing steadily, continuously. But it's really been a supply side story. And those closures, you've seen very high cost operations close. Cost curves, I've never in my career seen a situation where the cost curve sits above the spot price for so long. So something had to give, and we've seen those mine closures happen. Will it last? No, I think enough has been done. The closure of McArthur River was the most dramatic thing to my mind. Not only did you see 18 million pounds taken out of the market, Cameco then needed to go and backfill those 18 million pounds, because they still had long-term contracts they needed to feed into. So it wasn't just taking 18 million pounds of the market. It was changing the supply-demand balance by 36 million pounds, because they then needed to buy that product on the market. So all those things have taken place. And I guess right at the moment, and I know we don't want to go there, but this Section 232 petition has really put a damper on it.
It has. And let's not get into that. Our viewers had enough of this. But I will ask you, as an Aussie, so is it a security issue, or is it just a commercial decision to submit the petition?
Oh, look, I think for those guys, it's driven by commercial ends, absolutely. So energy fuels, of course, I think completely commercial. However, they've appealed to the security side of things, and I think that's right. Why a country, the US is of course the biggest consumer of uranium in the world. They take up 30 to 35% of global demand. So to see all of that product supplied by other nations, I don't think makes sense. And I think that, I'd be very surprised if Trump doesn't find the same. I think as much as anything, his decision will be a political one.
Well, you've just argued a commercial argument. You haven't told me why you think it could be a security one.
Oh, look, I think for any country like that where they've got, where such an important part of their energy mix is from uranium, from nuclear energy, you need to secure supply, and so I think that is in essence a security issue, not a commercial one. Okay. And where so much of the world's supply comes from the former Soviet Union, CIS bloc countries, you need to be careful. I do think, however, though, Canada and Australia have very strong relationships with the US, so not really an issue to be getting product and supply from Canada or Australia, but you'd certainly want to foster your own internal production.
So it is a security issue. Short answer, yes. That's what you're saying.
I absolutely. And, I think for Trump, it's an opportunity to sink the slippers into the Clintons again, because I think people attribute some of that change in supply coming from Kazakhstan to them. So I think as much as anything, it could be a political decision as well. Well, we should know in a week's time.
14th of July. Let's finish it there, Craig. That was a great introduction to the company. Thanks very much for your time. Appreciate that. Let's stay in touch. Keep us abreast of the story as it develops. We'll speak to you soon.
Sure, Matt. My pleasure. Thanks very much.
Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.